This is not financial advice, it's just the wine talking.
Welcome back to It's Just a Wine. I'm your host Tal. Joining me, Matilda, Mel, and Gassia.
Hi.
Welcome.
Let's dive in.
In today's episode, we're going to talk about credit scores.
Fun.
But before we dive in, who wants to talk about their wins of the week?
I can. I recently started studying for another SOA exam. I feel like you guys have been hearing me say that for such a long time.
I feel like I've been hearing that for the past 10 years.
She's been studying, not joking, for the past 15 years. I'm not joking.
Oh, more.
And I've never met somebody so excited to do an exam. No. Write an exam. Always excited.
I would always walk in those auditoriums like, do I have to be there?
Honestly, I find it the best feeling ever.
I think it's because you're so motivated to keep growing your career that's why it excites you.
I was gonna say
I'm giving that energy out.
Go see your family doctor. I don't know, maybe something. No, I'm joking. I love you.
Love you.
Okay, sorry. Let's go.
Okay.
Another Taline Mel moment.
Yeah.
But yeah, that's a win for me.
Congrats and good luck.
Thanks.
Bon chance.
Thank you.
Because we're in Quebec, we have to mention that.
Okay, let's go back to credit scores.
Sorry.
Sounds like a not so fun topic, but it's super important. And credit scores are basically a score between 300 and 900. Remember, guys, it's just the wine talking.
Yeah.
Not financial advice. But it is a fact that it is from 300 to 900. And it's basically a score that represents your credit worthiness. So it's
how responsible you are.
And how responsible you are, and basically your financial personality, I guess.
Yeah, that's a great way to put it. And I feel like we disregard how important it is because...
Yeah, why is it so important?
It's so important because literally it affects every aspect of your financial life. Whether it is you want to get a loan from the bank, you want to apply for a mortgage, credit card, or even your tenants. Mm-hmm. If you want to rent, the landlord does a credit check. But even more than that, like even utilities, like Rogers is like a cell phone company in Canada for our US listeners. So like AT&T or whatever, they look at your credit score, and if your credit score is not high enough to their liking, they ask for a deposit. So like it affects so many aspects of your life and of your business life, and especially now that you put that, it reminds me to like if you want to finance something as small as furniture, it requires credit check.
Yeah.
Like because nowadays it's like so accessible to like make buy now, pay later payment installment. So it all has to do with your credit score.
I mean, like if I have a tenant, I would want to know like if he could pay on time and like get my money, because I don't want to I don't want to be left
running after them.
Exactly.
But as a landlord, it also gives you a picture of the type of person the tenant is. So if I'm a landlord and I do a credit check and I get a good score or a bad score, it tells me a lot about that person. And landlords can pick and choose who they want as a tenant. And so I want someone who's responsible. I want someone who pays on time. But beyond that, I want a good person. And I don't want to say having bad credit makes you a bad person. But what I'm trying to say is that it paints a picture of your personality, I guess.
Yeah. And how disciplined you are. You're so right.
It's literally like a report card in high school.
Yeah.
Like if you're I don't know, in high school, was it our score? I don't remember.
Our score was in
college. Yeah. But in high school, let's say if you were below
your
GPA, if it was below 60, then you have to cut down on some colleges wrong.
Exactly. It's literally the same.
To your point, it limits your options.
Mm-hmm. Yeah.
You're so right.
The higher your score, the more options you have.
Exactly.
The lower your score, now you're limited to, there's a bunch of companies who say, we don't look at your credit, just come and whatever. And those people probably have an insane interest rate. So
because technically the higher your score is, the lower risk you are to the bank's eyes, because you make your payments on time, so that qualifies you for lower interest rates, whether that's on your credit card, loan, or mortgages, anything.
Yeah.
It's like you get a better financial deal with the bank.
Like that one time that I always mention this on every episode, but I always I can always relate to that. But that one time I went to the bank, the girl goes, "Wow, you have such a great credit score." I'm like, "Really?"
You're super financially responsible.
I can be, but anyways, it was like a compliment.
It is.
And I didn't even know that I
feel good.
Yeah, I felt good, and then she explained to me what it was, and I'm like, okay, cool. And then I set up automation,
like automatic payments.
Sorry, automatic payments to
like your
pay my
credit
credit
cards,
card,
or even utilities, or whatever.
Yeah, but everything is like through my credit card, so I don't have to worry about like paying on time, so it doesn't like affect my credit score.
Yeah.
So like to the point where I don't know why people don't set that up. You know what I mean?
Well, actually, one of the things that calculates your credit score is payment history. So to your point, the longer you've made payments on time, the higher your score will get over time.
Yeah.
And so automating your payments, whether it's your credit card or your utilities, is a great way and a great tool that we have that can help with that.
Mm-hmm.
Yeah, and actually it could increase your score. And not only that, if you miss one payment, it could stay in your credit report for up to 6 years. Mm-hmm. So you don't want that, because that could affect your score.
And the amount doesn't matter.
Exactly.
Whether it's $1 or $1,000, it doesn't matter. If you're late, you're late.
I'm super financially responsible, but
Really?
I missed a payment for $2. I was late for 2 days.
How is that possible?
And my credit score decreased.
Wow.
She's
Yeah.
not going to be able to sleep.
Yeah, for sure. She's gonna
I
be
Not just
But-
tonight, I think for the next 2 years.
mad.
6 years.
6 years, yeah.
No, but like, you know,
Just let them.
no, but
them,
it's not
whatever.
even that. It's like all the times I did right, but the one time I did wrong.
It's okay.
Let the
They
credit
can
gods
Exactly.
let
do their
them.
job.
Let
So
I'm letting
to the
them.
question, like, do people not know that you can set up an automation method or whatever you call it to
I
pay
think
your
it's a
credit cards?
personal choice. Like for me,
Yeah, do you guys have them
I
automated?
don't, I don't have me. I like to check.
Okay.
And then if there's like a weird amount, I'm like, no, I don't want them to automatically take my money.
So
I guess it makes sense.
Mine was like that too. I wanted to check everything before I paid it, especially Rogers, because a lot of times I would get these fees.
Up and down.
Credit card? Rogers is the worst. the worst.
It's crazy because it's like my bill was never the same every month.
Yeah.
And so I wanted to check it. But then automating them removed something from my to-do list, because now I don't have to think about paying. But when your bill is ready, you get an email and it says, let's say your amount is $100, your bill is ready. So I know I have to pay $100. If I see that amount is more, if it's less, it's good, but it's never less. But if it's more, then my automatic payment only gets withdrawn a week or two later. So you still have time, Gus, to go and check
Whether it's a right.
Yeah, you just have to do it faster.
I have 2 credit cards, and one of them is automated because I don't constantly look at that credit card. I don't usually use it as well. But my main credit card, I do it on my own because I'm already looking at it all the time.
Yeah.
Every day.
Every hour, every
purchase.
minute, every
No,
second.
not every purchase, but like
Even
Let me
on
put this
weekends,
up.
you look at it.
Weekends, it's a
course.
vacation. Oh, okay.
No days off.
no, but like I even know the dates by heart. My due date, when the
Okay,
next
what I told you before, like beginning, like go see a doctor.
what?
Go see a doctor.
Go see a doctor.
I'm joking. No, but it's good though. It's good. Like we're learning from her too. Like it's really important to always be on top of your stuff. Not because all these stupid things that come and then you don't pay and then you get penalized and then
Yeah.
And then that's it. It stays on your credit for a few months.
So how do I check my credit score? Like because I
I can check on my bank app.
Yeah, and
Yeah,
a lot
I
of
do too.
nowadays, most of the banks have like a tab where you can go check your credit score. And what's good is that that's a soft inquiry. It doesn't affect your credit score to check your
What's
own
a
credit
soft
score.
inquiry?
So basically, when you're checking your credit score on your app or your banking app,
I'm
or
checking.
even
I'm checking.
okay,
now.
do it, or even on Equifax,
Checking your like profile, maybe.
it doesn't. It just gives you the number. And so it doesn't give you a full history.
Do you have banks?
But sometimes it does mention why it went down. Like my previous bank mentioned mentioned why it went down and what I
I'll
can
check it
improve
another time. I
on
can't find
to increase it.
Yeah. But it's still not a hard inquiry. You're not getting like
You're not applying for something.
I'm a tenant, and my landlord asked when I was in the process of getting this location, I don't know, this house. He asked me for my credit report, and when you go on Equifax to pull your own credit report, it's like 30 pages, if not more. It's a full history from like the day you've had a transaction to today. And so when you're pulling your credit score on your bank, you're not getting all of that. That's a soft inquiry. But when you're applying for a credit card, when you're applying for a loan, if your landlord asks for a full credit report and you're doing a hard inquiry, now that could lower your score by a few points.
Mm-hmm. Yeah.
And so it's if you're applying for a credit card, it's good to not apply for like 5 credit cards the same day or the same month, because now you're going to get a substantial amount reduced from your credit score. So when you're doing hard inquiries, it's good to spread them out because it fluctuates, your score will go up, down. So like by a few points. So if you spread it out, then you're not getting like such a big hit at once.
Yeah. And I feel like even if you have a little doubt that like you might not get approved, for example, like if you think you're not going to get approved for a high-end credit card, then don't apply for it, because chances are you might not get approved.
Yeah, for example, if I am buying a house next year and I
we all know that you can have a great interest rate.
Yes, your credit score.
So if I want to buy a house and I need to get a credit check and it does not go through, like they deny it, does that affect my credit score?
So the bank will do a credit check to look at your score, and that number will tell them if your score is good or bad. Then they go deeper. They look at why your score is low, and what debt you have, and all of that. All of that is in your credit report. I think that what lowers your score is the hard inquiry, and again, not by much, but the denial doesn't necessarily reduce your credit score.
Mm-hmm. So I feel like that's like, it doesn't people say, or it's not put out there that it doesn't necessarily reduce your credit score because you got denied. But I feel like whatever you do in your financial life, it's being tracked and it's being reflected on your credit score. Mm-hmm. Like I feel like if you take out money from your savings account and you put it somewhere else, not necessarily use it, the bank sees it, you needed that lump sum, so she's in a tough position, so the credit score falls down a little bit. I feel like that's how it works.
I think
so. You should be careful.
I think your behavior, your financial behavior, has a huge effect on your credit score. But they say that Equifax or whatever, they say we calculate your credit score by looking at this. So technically it's not said or out there, but it is, I truly believe that it is in fact a factor.
Yeah.
Like if you close a credit card, your score goes down a bit. And I know that has something to do with payment history, but then on the flip side, it's like, if I have too many credit cards, it's not good. If I close a credit card, it's not good. So
but also it seems like if you're closing a credit card, that it's like has to do with this entire thing. Like for example, if you close your credit card, it could mean through the bank's or Equifax's eyes that, oh, you can't control your spending, so you have to close your credit card in order to not spend on that credit card. So yeah, that could affect your.
But on the flip side, if you have too many credit cards, it's like, oh, you could max all of these out, and
exactly. So like it's the same thing.
Exactly. So it's really your financial behavior. There's no like guidelines or like perfect way. There are ways to make it better. There are ways to make it worse. But
so how do you get your credit score?
Like utilization, the way
utilization, I think, is a huge one. They recommend, or they say that having 30% or less utilization on your credit card is good, and even better to have less than 10% utilization.
Can you give me an example?
For example, if you
have not big numbers, please.
Okay, like you have a credit card limit for $1,000. A 30% utilization is
$300.
Yeah, and let's just make sure, because
no, it is.
I know, but I just make sure, even though I'm
even like 2 + 1.
Yeah, I'll make sure. So 300 is 30%. So you should. It's the recommended but not ideal, like she said. But if you use 10%, which is $100, that means spending $100 every month, but paying it off every time, you'll get a higher score. But let's say, I always say this, and this is how you can improve your credit score. Let's say the bank offers you to increase your limit to $2,000. That same $100 or $300 you spend for a $2,000 limit is a less utilization percentage.
So if, let's say, you're at 30 with $1,000 credit limit, you spent $300, you're at 30% utilization, which is good, but 10 is better. Now you're at 2,000, you're closer to the 10.
Exactly.
Your limit increased, but your utilization got lower.
And you shouldn't spend more because you have a higher credit limit, because you didn't get a raise. But you just got a limit increase.
For me, if I have $1,000 limit, I'm gonna spend.
You shouldn't.
Below that, not exceed it. I'm not gonna spend $300 a month.
But a lot of people spend the entire thing.
No, me too.
But you shouldn't.
But life.
Unless you use it and pay it off right after, not wait for the bill. This also has to do with, like, if you pay in 2 payments your bill, you'll get a higher credit score.
Yeah, but
rather than paying it all at once on the due date.
A lot of times, like, I want to use my credit card for a purchase because I want to get some points or whatever. But then as soon as I do the transaction, I transfer from my checking. So I still got the points. I still used my credit card, but my utilization, it didn't really count in my utilization because it didn't really go on my
due date. You like paid the balance off quickly. And like, I feel like that's how a credit card should be used, because then you're technically using the money you have and you're not borrowing the money.
Right.
Because you're spending what you have.
Yeah.
And that's technically what you should do.
Do you have any questions?
I was gonna say, does the credit score really like matter in life? I know it does, but like, what are the
I think
benefits,
this is
kind of like
of having like a better score.
Yeah, I know it gives you a better interest rate, like I told you.
Yeah.
You're gonna have.
You should aim to have more than 700 as a credit score, because that means you're somewhat
good,
responsible, and you should be on your way to like 800. But I think it's important because it's like a number between you and the bank and what offers you might get in your financial life. And you know, like, the bank is there to help you. Okay. Some way, yes, because if you need to if you want to do a business and you need to take out a business loan, they're the ones helping you out. And if your credit score is not good,
they're not gonna they might deny you that loan.
Exactly.
You want to be besties with the bank.
Yeah.
So it might,
also you want to understand the way they do things.
But it might set you up for success.
Yeah.
And it might open doors for you, or it might not. And you know, as a kid, I'm saying kid, but like as an 18-year-old, I wasn't thinking about my credit score. I didn't care. I was always responsible, but I would think that people who are not aware of the impact that it could have on their life in the long run might not pay too much attention to it and might not prioritize it, or like, oh, I missed a payment, whatever, I'll pay it in 2 days, or whatever the case may be. But now you're at like 20, 30 years old, you're trying to make moves, you're trying to do something, and you go to the bank and they're like, yeah, that's not going to happen, your credit score is too low. Now it's going to take you months, if not years, to build up to a certain level for you to do things. You might have a great idea, you might have so much potential, but you're stuck because you don't have the cash flow, you need the loan, and you can't get it. So it can really set you up.
Yeah.
It's so important.
Yeah, I saw, like, I did some research, and if you have a bad credit score and to improve it, it takes a long time.
Yeah.
Just small improvements, it said it takes
Imagine getting
1
up
to 3 months.
like
Which is not bad. Like,
Small improvements,
Small
not
improvements.
even major.
like imagine somebody has a credit score, because like she said, if the younger you are and the longer you've been responsible with your financial life, the more your credit score will be up. But let's say somebody was not responsible and they start off at the age of 30 with 500. You know how hard it is to get to 800?
Yeah.
At that point.
Yeah, it's super hard. You need to like make significant changes in your financial lifestyle in order to make that kind of change happen.
Automatic payments,
And
no late payments.
And some people just make the minimum.
And
They don't even pay off the entire credit card.
Okay, if you pay the minimum, let's say you owe, I don't know, $600, but the minimum payment is $40. If you pay the minimum payment, does your credit score go down, or it kind of?
I'm not sure exactly, but I think you'll be fine because you're still making the payments.
Yeah.
What they really care about is if you're making payments. If you make none, then it's definitely going to be affected. But at that point, if you're just making the minimum payments, you're being slapped with like high interest rates, and then you're losing as well.
But that's another topic.
Yeah, that's another topic. But they're basically making money off of you, so that maybe not penalize as much.
But I think another thing that's interesting is there's like this big misconception where your income can affect your credit score, which is absolutely not true. But
why would you think why would anyone think their income would affect their?
I think like people have this idea that like someone who makes $100,000 or $150,000 a year has good credit, but that has nothing to do with credit. Someone who makes 30, 40 grand a year can have a lot better credit than someone who makes 100 plus.
Because maybe that 100 plus person is just paying their entire paycheck
To
and
their-
more, probably maybe over their paycheck, and not paying on time. But that $30,000 salary person has a budget list like Mel, probably.
And so it's not about income, it's not about the amount, it's about
the responsibility to.
And I feel like when people have like a really high salary, they think it's like their financial personality.
Yeah, but your financial personality is your credit score number and not the amount you make.
Yeah.
And we posted something on our Instagram today about the 5 myths of financial freedom, and one of them that I mentioned talks about how the more money you make, and I've been guilty of this in the past, the more money you make, the more like your lifestyle grows with you. And so you start making more money, you start spending more. You get a better car, you get a bigger house, your lifestyle changes. And it took me a while to realize that that's not it. That will not get me to financial freedom. I might
Shout out to episode 1. If you guys want to go watch it.
I might, I was still living a good life, but I had to have I had this aha moment where I'm like, wait, none of these things will guarantee freedom. And freedom is not about money.
It's about what you do with your time.
It's about time and what we do with it and how we spend it. And you talk about that in episode 1 about how what your perfect Tuesday would look like. And your perfect Tuesday is time. And so,
and being able to control your finances without a worry. I feel like that's such a good feeling, because I'm not saying that it's the most important thing, but it's the one thing that gets you through life, because everything is based off of money. You have to pay to get this. You have to pay to go to point A to point B.
But I also think like financial freedom is different for everyone. My financial freedom might look different than yours. My time might be worth different than yours. The way I want to spend my time might be different than yours. And so the financial aspect plays in that role.
Of course.
I could...
the amount you need for that time.
It's personal and it's subjective to me, because I might be good with 100,000 a year and it might reach my financial freedom. But for you, maybe you need $1 million a year. You might need 500,000 a year. So it's different for everyone.
Yeah.
And so back to my point.
Credit scores.
Income doesn't matter.
Yeah. How you spend your money wisely and responsibly.
And how it reflects the credit score.
Yeah.
So all this to say how important it is to be financially responsible, because it doesn't affect your lifestyle in the future, but it also reflects on your credit score and the relationship you have with the banks. And
it might, I'm sorry, but I disagree. It might reflect your, what did you just say?
I said it will reflect your financial life.
Oh, I thought you said it will
future.
not.
No, of course.
That's why I was like, wait, what? No, it does.
Of course
okay,
it
I'm
does.
sorry.
It's the wine.
It's the wine talking.
It's the wine talking. Yeah.
But cheers, ladies, to
Cheers.
a good credit scores.
To a good
To
credit
being
score.
responsible.
Yes. Like, comment, and share, and give us your thoughts.
And subscribe.
Subscribe. Cheers.
Cheers.